On behalf of Crosscheck Media and Biz Talk Today TV, welcome everyone to Wayve Wire. The premiere episode is here. Everyone has been on the edge of their seats waiting for this show, and we have it for you right now. Joining me today is the CIO of Wayve Capital, Rhys Williams, and Joe Besecker. He is the incoming CEO. He's going to be taking over the reins the first part of the year in 26. Rhys, I got to say, I want to start off because we have had a roaring stock market this year. You've been on the shows many times. We're up over 16% in the S&P 500. What would you tell an investor right now if they weren't invested in the market, but they wanted to get into equities today?
Well, actually, I think the most interesting part of the market is the most out of favor, currently out of favor, obviously in favor over the last couple of years, but we've had a very significant sell-off in AI-related stocks. And we think that that's kind of an opportunity because there's been a lot of talking heads on TV talking about you need to rotate, you need to be international, you need to be value, you need to be in something else because AI is a bubble. And we think actually that the Micron report this week kind of showed that it's not a bubble, and 26, even though Micron is currently valued like 26 is peak earnings, we actually think 26 is not the peak, and 27, 28, 29, somewhere around there is going to be the peak. So we think there's some room to run in this AI infrastructure trade, which the market is.
I think we lost Rhys.
We did lose. Yeah, we lost him.
We lost his audio there for a second. But until then, I mean, Joe, jump on in here. I mean, what do you think about that on the AI trade? I know Wayve Capital has been big with AI. They've been focused on this for their investors. You're about to take over here. I mean, is that your philosophy as well?
It's a philosophy. I mean, look, we've been in the business a long time. We've seen different cycles for different groups. And this one has a lot of promise. Now, when you have this much money going this fast, things can, what's the saying in Silicon Valley? Go fast and break things.
Right.
Things will break, and companies will overspend. There's some alarming trends that we saw back in the internet days of how you fund this mega growth. Certain companies have it because they have the balance sheet. Certain companies, people are afraid that are borrowing money to get this thing going. So it takes somebody with the experience of Wayve and the people like Rhys have been around forever to be able to try to ascertain who the real players are and who I can guarantee you this: there will be losers, okay? But I also guarantee that there will be big winners. And that's why people pay managers to try, because if you had to try to figure this out all by yourself as an individual investor, it'd be extremely difficult to know. Now, you can have an opinion, all right, but and even as a professional, it's very difficult to wade through all the information that we're getting to try to pick the right names. But that's what we get tasked to do, and I think we'll do a very good job at it. So overall, market-wise, I am not a perma bull, as it were. I think you've seen, and we've done TV together, whatever. But on balance, it doesn't pay to be a long-term bear. It just doesn't. All you have to do is look at a 20, 30, 40-year chart of the market, and it's up to the right. And yet, when, just like I said, at the internet, there are going to be winners and losers. I think it's much better this time with AI. I think there's going to be more winners, and but on the and overall, I feel pretty good about the overall market, not just AI, but overall, especially going now. It doesn't have to be a 20-30% market, but I think people can make money in this market going forward for sure.
Okay, that's great. Rhys, I'm not sure if your audio is working again, so I'll throw this question out to you. Why don't you give me a thumbs up and tell me if you are? So, but right now I want to ask you though.
It wasn't working.
It is working. Okay. So I want to know though, going into 26, I mean, obviously you have so many items right now that seem to be working in favor of the bulls. I mean, is your feeling in 26 that we're going to have a repeat of not just this year, but last year as well, where you have a double-digit gain in the markets?
like I said, I'm not positive about the overall market because I think you have a bit of a dichotomy going on where you have this sort of famous K-shaped economy. And I think there are some some tailwinds, which is the tax reform, some things coming in the market that's going to help broaden things out. But the dominant theme, I think, is going to be this whole AI infrastructure build out. And to me, it reminds me a little bit of actually not just the internet days, but the early cell phone days. I remember in 1991, 1992, people were talking about all this capital that has to go in before you actually turn on a customer. And it was not that, it was very controversial because these phones were huge and the battery life was almost nothing. And literally you had to charge it 3 times a day. And not that many people had it. And in fact, if you went into a portfolio manager in 1992 and said, hey, I've got this is going to be in your pocket 15 years from now or 20 years from now, and you're not going to have a landline anymore, he would have looked at you like you were from Mars because it's too crazy.
Rhys, I thought you were going to talk about your bag phone because I saw you a couple of years ago. You were still carrying the bag phone around. So, and I also was afraid when you were talking about when a different era, and you were going back. I was afraid you were going to talk about the advent of the automobile because that was about the beginning of your time. So, and I'm older than I'm older than you,
I
but
was around in 1925, actually.
I mean,
Joe, let's address the economy then. You had a number of reports that came out this week. We had the Fed last week with another rate cut. What do you think going forward, though? Do you anticipate more easing by the Fed, particularly since we'll have a change in leadership at the FOMC?
I think that's the more important thing is that given the current makeup, I wouldn't be certain, but I think it's pretty clear that this administration I mean, they're not playing a cagey game of poker, right? I mean, they're saying we're going to bring rates down. Now, how fast they can and how much, they'll do and who the new Fed chair is, but I don't think that we're in a situation where we can fight that. I believe that, the old don't fight the Fed. I think the Fed is pretty much not the Fed necessarily, but you pretty much can count on a more dovish scenario out of the Fed than what we've had recently. Now,
Okay.
You just said about some reports. They're already starting to throw darts about some of the economic numbers that have come in and saying they're not necessarily real. And I think you're going to have this transition period of after the shutdown. Heaven forbid, and I don't even want to say this on anything that's taped. Heaven forbid we get to a point where we're going to have to shut down the government again. Wow. Depending on because all they did was push it out a little bit, right? So
right.
I don't think that will happen. I don't think it's in anyone's political best interest, but it's certainly something that if I really get in a nervous Nelly mood, I'm going to keep an eye on. So, but all that being said, I think you can see, and I think we talked on the pregame. I was down in Florida. I'm seeing green shoots in real estate all over the place. All right. Not just in Florida, but all over the place. And they are green shoots. These aren't like, big tells, but I've been talking to a lot of my network of that, and the calls coming in from people either moving from one area to another, or because we have a little bit of interest. There are more calls of having interest. They're not rushing to close things down. And I think that will also help the market as well. So all things being equal, I'm a pretty big bull right now.
So how about that, Rhys? Add to that a little bit. So if you have the rates that are obviously we're in an easing pattern, but then the long end of the curve, you're not really seeing the moves that I think a lot of people were anticipating, but we still may in the first quarter of next year. Will that be an accelerant for the real estate sector?
Well, for sure, if you can get long rates to come down, that's going to really help the real estate sector. The issue, of course, is if you ease too quickly and the Fed is perceived as being too dovish, you could actually hurt the long end. And I think that's going to be the tightrope that these guys walk, because it's not just bringing down short rates. That's easy. But it's really what you want to do is bring down long rates, or the 10-year, because so many automobile loans and housing loans are tied to that. And that's what we need. So I actually would adopt a little bit more cautious approach if I was the Fed chair, which I'm not being considered, unfortunately. But yeah, I would do a little more cautious because I think really it doesn't matter what short rates are. They should be laser focused on how you get the 10-year down.
Right, right. And Chairman Powell, though, I want to get both of your thoughts here that since the October cut, Powell hasn't spoken to the public. He's not doing any speeches. He's not doing a thing with the press. It's almost like he shows up for that 2-day meeting and then that's it. And he goes somewhere else. He goes down to Florida looking for Joe's place. So what do you think about that, though? Do you think he has senioritis at this point? And if that's the case, what's that do for the overall, I guess, concept of the FOMC?
I'm not sure Rhys and I are going to agree on this, but go ahead, Rhys.
Well, I think that the more he talks, he's just going to get heaped on abuse from the White House. So better that he just stays out of the way. I mean, he's clearly a lame duck, the lame duck of all lame ducks. So best that he, keeps his head down and, rides it out until May and there's a new chairman.
Okay, Joe.
I don't think he's done a horrible job. Given the scenario that's here, he has, at least it appears, constructed a semi-soft landing from where we were.
Okay.
Maybe not soft enough for some people. I don't think the Fed I've not been upset with how the Fed's done things. Would I do things a little differently? Maybe, but I think what he is showing is competence. I don't think he's what the White House thinks of him. I think that he's trying to manage through really unprecedented times with the pandemic. And I didn't agree all the things they did. I didn't agree with paper in the world with money and liquidity as much as they did, but you got to pay the piper on that at some point. And he's stuck in the middle a little bit. And I think as he's going out, I think he'll be remembered as decent, all right, and a decent Fed guy. And it'd be interesting to see who comes in. And where I was wrong is that Rhys and I kind of do agree. I think that he is. There's no upside to him going out squabbling with the White House. There just is no upside. So I think
Right.
he's gonna try to stay above the fray, stay out of the line of fire because he knows. I mean, he knows now. Rhys, do you know? Is he gonna? Are they gonna try to keep him on the board and not be the chairman, or does he just exit stage right?
Most of the time they exit stage right, but I really don't know what's going to happen here.
Hmm.
So
Okay, well, it remains to be seen then. So, sticking with the Fed, though, one item that obviously is front and center is the labor picture. And we continue to see numbers. We had a combo report released on Tuesday. I don't know if you guys got fries and a drink with that one, but we had the number give us a negative on the October reading, saw a slight positive for November, and unemployment popped to 4.6%. With that said, what is the read at Wayve Capital for the labor market as we proceed into the new year? Rhys, you want to take this one?
sure. I think that it's still going to be pretty tough on labor. And by the way, as bad as it is or tough as it is for labor, that's not necessarily bad for capital, because I think your productivity is really going to boom. And part of it's the AI, but just in general, I think there's a lot of attention to productivity improvements. So I think that's kind of good for earnings. But I expect we've had a period of unusually low unemployment. And my guess is the new real unemployment rate is going to be higher, or the new normal is going to be higher unemployment, because frankly, it's going to, I think, stay secularly hard to get that first job, which is going to keep the 20 somethings in a period of a little bit of turmoil.
Interesting. Joe, do you agree?
Sorta.
Sort
Sort
of.
of. I understand where Rhys is coming from, and I tend to agree. I happen to believe, however, that we tend to forget about all of the gyrations that happened and prior to the pandemic, and I think we're going to go back to what the market was trending and looking like. I'm not talking about the markets per se, but the job market per se, as we were going to that. And I believe that the hand-wringing about unemployment as we get into the third or fourth quarter next year will abate. And I think that people will find their level. People will find jobs. They may not be the silly jobs that were there before. And, people were, if you remember, before the pandemic, the big problem was, we can't find the people. We can't find the engineers. We can't find. Well, now, and look at our business. All right. Look at the business that Rhys and I are in, and you were in.
Yeah.
They're chasing people. They were chasing people with ridiculous packages, whether they be research analysts, money managers, brokers. All right. And I think that's just going to settle. People were going to have to go to a more normalized position as opposed to how ridiculous it got to. So I think that transition again will take a look. The Fed used that big word transitory before when they were talking about inflation. I think this is truly the transitory period. I think things will work their way through, settle out, and I think we'll be on solid footing going forward. I am gonna beg for 2 or 3 quarters for that, but I don't think I think that people will figure out using AI. And you just saw some of these reports, and you know this. AI is wonderful. It helps us a lot, but it's not ready for prime time yet. It's not ready to replace you. It's not ready, hopefully, to replace me in a meaningful way. I mean, if you use AI now and look at the three of us, there are so many mistakes on that. I have one of the greatest degrees, according to them, from the University of Virginia. I've never been on the campus of University of Virginia. There's a lot of issues with AI that is not perfected. And yeah, they can do funny clips online, but it's not ready for prime time. You're going to need people. You're going to need verification of stuff. I just think what will happen is during this transition period, you're going to, just like a regular business cycle, they're going to let go of some really expensive people, but they'll replace them in a more meaningful market cap way. And I think we'll be fine.
So it's not true that you were playing above the rim with Ralph Sampson and his.
Well, I happen to know Ralph Sampson, and I also can tell you that Ralph Sampson, I got to send this to him now. There's a picture in my brother's 2 years younger of our yearbook, because he grew up in Lebanon, Pennsylvania, which is not too far from Lancaster. My brother jumped center against him in high school, and it's the funniest picture in the world. My brother could leap maybe over the size of the Washington Post, about that far. Not the Sunday edition either. Ralph Sampson's jumped. He's about literally 7 feet above my brother as he's jumping. So no, I didn't do it. My brother did it, and I can't jump either, so it doesn't matter. But no, I think we'll be fine.
That is great. Well, my Maryland Terrapins play the Virginia Cavaliers tomorrow night in men's basketball. So hopefully there'll be that's an old school ACC rivalry, obviously.
So we shouldn't do this on an investment call, but my college roommate was a guy by the name of Boo Williams. Now I've got to send this to Boo as well. And if you remember, Buck Williams that played for Maryland.
Yeah.
You were young.
1980.
Now, Boo was trying to recruit him to go to St. Joe's, and Buck was much better going to the University of Maryland, and he was a pretty damn good player too.
Yes, he was. Absolutely, he was. And the 1980 ACC championship when Duke fouled him, but there was no call. But that's another story, Rhys.
That wasn't Kenny Denard, was it?
I can't remember, but he was.
Well, there was a famous play where Kenny Denard was supposedly undercut him, and Kenny's a good friend of mine. He knows Rhys. He's a Dookie, and we'll give him a shout out here. But those days of ACC were unbelievable, and
no doubt.
It'll be interesting to see how it goes this year. So
yeah, you're right about that. So Rhys, back to the AI theme. One of the best parts about Wayve Capital is that they're willing to put you on a jet and send you over to Taiwan to really look at these AI companies and kind of the Wedbush model. So with that, with AI going into 26, is it still all AI, or are there pockets that you're probably a little bit more bullish on than others?
I think next year is still going to be fine for most AI related plays, because I still think demand so exceeds supply, and that was what I learned from my trip to Taiwan. And I do need to work on my sartorial splendor to compete with Dan Ives. But I do think what you're seeing from all these companies is we want it more yesterday than tomorrow. And I think as long as that's the case, you have pricing power. So I don't see any holes yet. And I remember 1999, there were holes starting to develop in December 99 when I was there. People talked about, hey, maybe the orders aren't so good, and obviously that was a precursor to a very tough 2000. I don't see any sign of that. And I think the Micron call this week, really accelerates that idea that, I mean, I think they were expecting $4 per share in earnings, and they said, no, we're going to earn $8 for this quarter. The consensus prior to the call was 19 for the year. They're going to do 8.25. So I think people kind of underestimate still the power of AI infrastructure for the next year.
Rhys, can I ask you a question? Why is it that Micron has such a lock on that particular space as opposed to the rest of what's going on there?
That's a good question.
So it's the new HBM memory, which is what you need to run these data centers.
I know.
And everybody else has yield problems, and Micron is doing better. Hynix also is doing very well. There's three major players. The other one is Samsung, and Samsung's had yield issues. So I think those are the principal reasons. But really, I mean, I think Micron said if we had 50% more, we could sell it. So it's not like it's close right now. There's way more demand than supply, and you really need this memory to make these data centers hum.
Okay. So Joe, let me ask you this. So let's say you're in the office, Rhys goes, he's walking down the hall, he knocks on your door, and he says, Joe, I got a great idea. Let's use an AI algorithm to actually trade stocks. What do you say to him? Do you like the idea?
I do. But I think there's a space for that. All right. Yet the truth of the matter is that when you're following certain, unless you have some proprietary, which these huge shops do, I think it's an exceptional tool. Would I want my entire portfolio managed by AI? Absolutely not. Or else, I'd get a stock that has an advanced degree from University of Virginia, like myself, which I don't. But so I think there's issues. I think you need to utilize that as a tool, and I do believe, in certain sectors, that AI. You go back to Bogle at Vanguard. In his books, and I was on a stage with him one time. I still believe there are certain sectors that you cannot manage, or large cap companies, bonds. I think you could do through AI, but I don't think you can do small mid cap through AI. Some international and let's look at what's working right now. Biotech, right? You have non-earners. It's hard to model non-earners because there's you're going to have a moment in the life of some of these small mid-cap companies, especially in the life sciences area, that are binary, right? And they can't figure that part out. And so what I believe is that it's a great tool, but you need to do, I'm a big believer in intense, fundamental, bottom-up research. You got to do your work. And then you can utilize those tools to do 50, 60, 70% of the stuff that you used to use research analysts to do that took up a lot of the drudgery time, and they can then go, it's kind of like an editor, or you bake a cake and you do the outside of it. And that's where I think the differentiators, I think that's where you're going to get a lot of your performance from the good seasoned eyes and ears of a good manager. But do I think that someone, if it's a kid out there that wants to put their own AI model out there, if they're on top of it, I think somebody could do well with that. But I don't think AI is ready. I think I just told you before, I don't think AI is ready for prime time with that.
You did say that.
But it's certainly a good tool. And it's going to be a time-saving tool. So we can use our time and our experience. We don't have to go down through that original stuff. We can use our time and experience. Rhys was talking about it. Remind him when the cell phone came out. I happened to be in the room when Steve Jobs introduced the iPhone. Right, I was in San Francisco for that, And I remember I was in a room and it was so large and I was in the very, very back. I was actually lucky to get in because I was late. I was coming over from the JP Morgan Healthcare Conference
Hmm.
and they wouldn't let me in, but I got in because I had a pass. And I remember when they said we had all in the back row, it was draped, and that's where they were demonstrating. They had about 20 people demonstrating the iPhone. And I was one of the first in line because I was all the way in the back, all the people in the front that wanted to see. So I remember taking this and, the first time I saw a picture and I could expand it and do all this stuff. When I saw this, I knew it was going to be something special. And I think that's the way I feel about AI. There's going to be a lot of things that are very special. And yet it doesn't, not everything they used to have on here is usable or workable. It might be a nice feature. So once people start to really understand and how to utilize AI, it's going to help our business. I wouldn't manage a portfolio like that, but I really do believe that there will be a time and a place where people will manage just kind of like a passive index fund. There will be a time where that's done, but I think there's always going to be a space for smart people to help make those decisions. So I don't think it's the worst thing in the world, and I think it would be very inexpensive. But I do think there's room. There will always be room for us.
We are.
That will be interesting because you're right. You need the human element there, but if there is a computer that's doing everything for you, Rhys, what about that? I want to rephrase the question for you because it sounds like we could be seeing portfolio managers, fund managers, ETF managers that just won't. There's just no place for them. I mean, do you think we'll be there one day?
Well, maybe, but it's not tomorrow, and it's not next year either. So I do
Okay.
think, and I think it's really going to be a tool. I agree with Joe, and it's going to be a tool. We're testing now AI models right now to try to see, and what it'll mean is there'll be fewer research analysts for sure, right? As that comes on, but now you have screenings, right? You've had screens for 50 years, right?
Yeah.
On stock. So this is just a glorified screen right now because it can absorb way more information and also make it more real time and more evolving. So I think those things are really interesting. But I really want to say it's a kind of a tool now, points us in the right direction, but we're not just blindly following AI models.
So I do a lot of speaking at schools, and I can tell you almost every school, a kid will come up to me and wants to talk to me about his AI model for managing portfolios. I haven't seen one of them become a billionaire yet, or even a half of a millionaire. So I don't think it's ready for prime time. Um, I do think that there's a space for it, and I think very much now. I think things like FactSet and Bloomberg and these types of things are going to have to adapt because the things that you only used to be able to get from that are now going to be readily available. So there will be, again, the word transition. And if old geezers like Rhys and I don't listen to the youth, just like they didn't necessarily listen in the internet. I remember when we were first getting the internet, and I sound like one of these old guys. I remember but I remember when this happened. Our interns knew more about how to get and utilize the internet than our analysts did. And we actually would have sit downs with our intern group to kind of teach up to the older people.
Hmm.
And I think that we got to constantly be on our guard to be able to utilize and implement the best tools that are available to us. And it is and reset it almost at the start. It's a productivity enhancement. It takes away, it takes from the time we spend by applying to the point we can get it to where we can put our secret sauce on it. And the secret sauce is experience, understanding of how markets work. Just because you have a number out there, we saw this particular quarter. A lot of companies came out with tremendous numbers, and the market didn't respond to it. All right, the way that we would think, and that takes a little bit of experience and talent, and I don't think that's going to go away. But I do think it's going to be a great tool for us to use.
Yeah, I do agree with that. And I do think that this will happen one day where you will have an AI manager managing AI stocks for investors out there.
Well, I
And it
got
would
a pizza bet. I will bet you that a good, and then once again, remember, it's different. I'm a small mid cap guy. I will tell you that I believe that a good small mid-cap manager will outperform an AI small mid-cap manager 8 times out of 10.
Interesting. Well, we will see that one. I don't know, but it would be interesting. And plus, it would thin the ranks of the SEC because, from a regulatory standpoint, I mean, what are you actually auditing? I mean, it's just a computer at that point, but that remains to be seen. But I'm on that bet with that pizza, Joe. I love that idea. What a wonderful first episode. I can't wait. I know we're going on holiday hiatus for the next couple of weeks. We are returning on Friday, January 2nd, a big lineup of shows on BTT, and Wayve Wire is obviously going to be a big part of that. So, Joe, Rhys,
thank you for the time.
This was wonderful. I got to say, have a Merry Christmas, a happy holiday season, and a happy new year. And for the audience, go to wayvecapital.com for more information on Wayve Capital and what Rhys is doing as CIO, what the incoming CEO, Joe Besecker, is going to be doing. I know there's a lot of exciting things that are happening there. So on behalf of Rhys Williams and Joe Besecker, I am Todd Schoenberger. Thank you once again for joining us on Wayve Wire. Coming up on Monday on The Money Path is Sam Stovall live at 10 a.m. He's going to break down 2026. You want to hear what he has to say. It's going to be an exclusive for the audience. So until then, have a wonderful weekend. Take care.
Thank you.
Thank you.
Thank you.
Access real-time data and intelligent analytics exactly when you need them. Get the right data at the right time. Learn more at quotemedia.com.